morning, everyone, and welcome to the European crossover webinar. It's Happy NFP Day, and we see the euro working a little bit lower here. Got a little bit of support in here. If you got short, one of the chat rooms I was talking to them about adding again at 1087. We got that price overnight, and suggesting a decent area to cover here. You can grab yourself about 22 pips, unless you want to try to hang on all the way through the report. But we do get some, a little bit of wild bounces as we get into the last hour. Now, the NFP report is expected to be favorable, and then besides that, the market's already bearish. I'm talking about the euro dollar. So it's not unusual to see the market maybe try to even push even lower. So we could even push into the 40s before that. But sometimes, as I said before, you get some quick swings in the market. And like I said, if you did jump in that short with me at 87, it's not a bad area to go on and grab yourself 22 pips, take it off the table, and just get ready for NFP. I do expect the NFP to be very good. So for those that just want to hang on through the report, and we'll take a look at those levels. Certainly going and certainly be able to go and ride that. Probably get short and then just hang on through this report. And if we do see the numbers we're looking at, we can definitely go in and drop another 35 pips. Just to, on the first run, but we can certainly go on and move lower. We also saw the energy market come apart on the release of the EIA report. One of the things that I did note is that in one of the chat rooms is that we've seen this up and down movement. And on one day they're going down like crazy, then the next day where you can't even find a bid. Then the next day it's up, and away, and you can't find an offer, which really that just leads me to think that there's no conviction in this market. Conviction in the sense that neither side has control of the market, I would say at this point. And my whole thoughts have been that I thought that, crude was a nice sell against that $50 area. I know that when I talked about that, it was about a little over a month ago. Someone gave me a hard time because it got like $1. I think I was looking for 50. Yeah, I was looking for 50. I thought the high would be like 50.27, and we got up as high as I think 51.57. So someone was chiding me and giving me a hard time about that, and they just didn't understand that the market already had a $21 run. So to be off off $1 on a market that's moved $21 is no big deal. And that was my whole thoughts, is that the economy, not the U.S., but the global economy overall is in a slowdown. I think the market's going to have a tough time gaining any traction above $50, and that's been my whole play. But crude has been a very tough market to go on and trade, but you can see as quickly as we gave up those gains, as we posted those gains the prior day, shows that neither side is really in control, but it does give me an indication that I believe that this market is overdone. Went to our bias pivot, which is 44.92, and then from there, I think that we can get down to 42.5 before we see another real semblance of a bounce. Obviously, RBOB, led the way, and we'll take a look at that. So as I said, all eyes are on the U.S. jobs report, and we'll take just a quick snapshot. It doesn't look like there's much news here. Dollar inch down against most currencies on Friday. Well, that's not even the case at the moment. Safe haven. All this is a bunch of non-news. All non-news makes no bit of difference. As far as non-farm payrolls, the consensus forecast is for the U.S. economy to have added 175,000 jobs in June. Now, I'm of the ilk that I think will be over 200,000 jobs. My thing is maybe 213, something like that, 219. If it comes in at this price, that's a good price. But I think that on any dips in the year will probably be covered. I think eventually it'll have that bias to work lower. Now, if we do get what I'm looking at is 219, then we'll definitely, I believe, we'll be testing 984. A report overnight showed U.S. private payrolls more than expected in June, and jobless claims were lower than forecasts. Obviously, a bunch of junk that's not really that important. We had that on my charts. We had that 2874, which is where they ran out of gas now. It looks like we had support before then. It worked lower, but that 2874 was pretty key in the cable. I'm not worried about the BOJ for right now. That's all. It doesn't make any news whatsoever to me. We'll look at cable. I had 29. I think it was 2937, and then beyond that 2874. We talked about that yesterday, and we said when they get down there, because I thought the 2937 would initially hold. I said 2935. But the 2874, we said if it wants to go down there, and I said yesterday, I don't know if it'll go through it, but any moves down there you want to cover. And I mentioned it in the chat room. Let me see if I haven't had a chance. Woke up a little bit late this morning. Yeah, I did mention this on the chat rooms. I even mentioned it in one of the chat rooms. Cable's still getting rolled. Look for 2874, and that's that area that we're talking about. And the market stopped just before 2874. Looks like it stopped at, but that was that area we talked about yesterday. Stopped at 2877, and I said, that's that area. I go, they may not even go to be able to make it through there, and I go, but that's where you want to cover. It looked like 2935 looked good, and then we still kept falling, and then like I said, we made that move down there, and I thought that was an excellent place to be covering those shorts. Go back in here. Okay, we're going to look at, on the non-farm payroll, they are expecting 175, which is the poll. The key is going to be, wage growth. Let's take a look at this. Manufacturing. They're expecting a gain of 0.2. Obviously, a gain of 0.3 would put a little bit of pressure, but like I said, with the cable falling through the toilet, what else is new? Everything in Europe pretty much is always sucks. There's no, because my thought was there was a good chance that the Fed was going to raise this month. I believed that the Fed was going to raise in July. And 25 basis points would be no big deal, and I've been saying that before the whole Brexit mess, was that we'd get a nice bounce back number, and that's going to allow for a raise in July, which I thought would be, and then if we got a very good, a very nice, I think it'd be very good, but very nice wage gain, that would pretty much seal the deal. You see what I'm saying? Like if we got like 0.3, boom, it's done, it's baked in the cake. But of course, with cable falling through the toilet, like I said, every other currency that's not the dollar is falling through the toilet for the most part. There's just, I don't see that they're going to raise at this point. If cable would have held its lows and then worked up like towards 138-ish, of course it ran out of gas and then went and made these lows. then I think there's still a chance the Fed may have raised because a quarter basis point would have made that much of a difference, and the squeeze have recovered nicely. But they laid the case why they won't, and it just, I mean, because everything's happening on the globe, so that ends up putting it back. And I think that they would have raised it. Of course, like I said, a lot of people, pick and choose their arguments. Now they say, oh, it's because the Fed won't hike. Well, look at every country that's not using the U.S. is all going through the crapper. So that's the reason why they're not going to raise it. They would have gone and raised. So, like I said, cable's still sitting in the crapper. So that's the reason why, But so, whereas I thought that today's report, now that was about 2.5 weeks ago, I would have looked at is it solidifying the possibility that that the Fed, the FOMC was going to go on and raise, which I thought that was going to happen, and we're a good number, especially like in the 200s. And then if we got a wage gain growth of 0.3, it was a done deal. Well, now this takes a whole lot of shine off of it now because whatever the number is, I think eventually the euro will work lower. But it's like I said, if they get a good number, if they get to 0.3, we're going to drop down there. But I think eventually the euro will work low, but it's not going to be like as if I would have thought had it not been for the Brexit. Whereas if a good number like that, we would have just slammed hard, and they would have just put the pedal to the metal. Now I think they'll drop down there, but there'll be a lot of give and take, along that way. So we can go on and move into the charts. Here's that area. We got short at 1087. I'll focus it here closer on the 30 minutes. If you took that trade with us here at 1087, which we're looking to get short again, and short, this is a very good area to go in and cover those shorts. We'll take a look at something right here. You see right there, the 65, 62. That's very nice here. It doesn't mean we can't dip lower. Like I said, the onus is going to be on this short side going into this NFP. And you can clearly see that the euro is under pressure at this point. Now, when we get the number out, like I said, as we come in, usually the last half hour, things get a little bit, dicey. And it doesn't mean that we can't, in the last half hour, or just ahead of the report, we're not in the 40s. Doesn't mean that we can't be there. We could certainly go and be there. But what we'll probably do is, you'll probably see a move into the 50s. Then you see the market jump and hop around a lot. But although most people expect to be a decent number, like I said, 175 is going to put the pressure on the euro lower. Pretty much anything around that 175 is going to take out this low right here. Below the markets, you see if we have a market over here. I've got 1007, but I've got 1004 on the 2-hour chart. Obviously, if the number were to come out weaker, then we're going to punch up. And we have a nice punch up, and my guess is we're going to make a move towards this 1140. And we'll take a look at it here on the 2-hour chart. We talked about this 1126. That would no longer be, it'd be lower because we've had this move lower here. So we'll readjust that. Oh, it's still, 1126. Okay, great. Martin and Amanda said both say good morning. Amanda says, thank God it's Friday. Adam says, nice call on the cable and the euro yesterday. Can you take a look at the dollar CAD if you have time, please? Yeah, sure. We'll get around to the dollar CAD. Yeah, I mean, I already got out. I took my gains on last night's re-entry at 1087. And I didn't post that on Twitter, and I think it was only in one of the chat rooms. I think again I might have mentioned both about getting short again at 1087. But yeah, I took that, and I'm already gone. I'm not going to hang on because, like I said, we're hanging around here. It doesn't mean, as I mentioned in one of the chat rooms, I go, yeah, this is a good area to cover. And I think it was right at 1065 at the moment. And I said, doesn't mean we can't drop into the 1050s. I go, but this is a very good area to cover because of the hijinks you see right before the NFP is my take. You know, like you'll see it bounce around. I mean, we might, don't be surprised. I mean, doesn't mean it will happen, but don't be surprised if we see it jump up to around 78 from here. And then we might dip lower, and we'll just probably see a little bit of hijinks. Most people believe that the numbers should be good. Not as good as I think. I mean, I think we can go into the 200 teens, like 213, 219, and that definitely is going to send the euro just flying lower here. But I think that they'll cover that because then there's going to be concerns about the Brexit. And so we might see the next month come back in a little bit. And I think that's a concern. So I think on initial move lower, they'll cover them. And then if we were going to move down there, then any moves up to 1048, I'm thinking would be faded. Then we'll come down here and we'll have to see what the market does at that point. But certainly the onus is going to be to the downside, you know, for now. And we'll move into the 2-hour chart. So here we are now. I mean, obviously a bigger outlook on this. But like I said, with a good number, I think we're going to go to 984. We could even overshoot it. But what I'm saying on a very nice number like 200 in the teens, we'll drop down to 984. We might even jump in here as low as the 963-ish area, and then we'll have to see how they bounce up. I still think the word for the day would be, you know, to just remain short and just trading for the short side, because I think that'll break us for lower, and then I don't think it's going to be like a straight swoop, but little by little the market will work lower. You know, my take has been that I think we're going to 843, really as low as 826-ish, and where I'm coming up with that is just, if you look at this range in here, I think the market moves down into that range. We can move this. You see here? So we have a lot of good volume. So there's 843 to 826. You see here? Very nice. Right there. So I think that that's where the market will go to before we see some semblance of a bounce. So 826 to 843. On the upside, if the number were to come in weaker, that's going to be a concern. Because what that's going to indicate, which I think the Fed would have been, the FOMC would have been raising rates had it not been for the Brexit. There's no doubt in my mind. If anyone wants to dispute me, you know what, you're just wrong. Because I've been calling the Fed better than anybody. And I mean, I'm talking about anyone even on Wall Street. And I tell you that right now. My calls on the FOMC have been nothing short of fabulous over the last 18 months. I know, like I said, you know, in January of last year, not this year, I'd say 85%, maybe closer to 90% of my feed said we'd be raising in June. And I said, there's no way in hell they were going to raise in June. And I'm saying June of last year. No, they knew. I told everybody, and a lot of big folks, let me tell you, which we had discussions openly on Twitter, it wasn't going to happen. And I'll be doggone, that was right. It did not happen. When everybody gave up ship in December, I told them, you know what, that's when they're going to raise. They're going to raise in December. And I'll be doggone, they raised in December. So like I said, if you want to dispute me on the FOMC, don't even waste your breath. You're wrong and I'm right. That's not even open to dispute. But like I said, they were going to go in and raise in July. That would have happened. Yeah, AZ says, mate, new to your webinars, nice analysis, but how do I understand your chart mapping levels? Any guide on that? That would help me understand what your levels. Excellent question, AZ. Excellent question. Yeah, here's the deal. Sometimes I talk a little bit of smack. I have been really on that FOMC. That's not even talking. Smack. Just what ticks me off is the people that now they say, yeah, the Fed, they never going to raise. Look, the only reason the Fed's not going to raise in July is because of what happened in Brexit. That's the only reason. Or we would have got that, a quarter, not a big raise, just a quarter point, but yeah, they would have been able to get the raise before we get into election season or right before the vote. And here in the U.S. Yeah, here's the way I trade, excellent question, is I keep it relatively simple. I look at the levels, okay, and then what I do is I use Fibonacci to strengthen or heighten the probabilities of where I want to go and come in. You can see this, look at this, 902 was a 61%. You can see, now this happened on the Brexit. That was a wild night. Believe me, I was trading on that night. What a crazy night. But anyway, you can see how we came here. Now that night was so crazy. All the levels were being blown out the door. I was adding fibs all the way down here like crazy. But what I try to do is I look at just the levels. And then what I do is that when you're looking at these painted areas or colored areas that you might want to look at, is that I try and see zones where I can see where the market's coming. I'll give you an example. We'll try and scoot this back up, see if we can pick it up easier on here. Okay. When we get into a zone, you'll see what the market does. It breaks out of the zone, but you see how it comes back into the zone. We bounce off of that and see. So this zone, we've got the lower portion of the zone and the upper portion of the zone. So look at this. Like a good example here is we make this run up here, and when we blow through here, and we get through the top of the zone, we blast right through it. So we're making this run. As we come back, you can see the market tries to hold this support here. You can see it right here, right there at the top of the zone, which is now support. Try and drag this back here. You can see that's support. You can see here, doing this on a more micro standpoint. Move it back like this. Too much doggone data. Okay, well here it is, and right now it's because of the way I've got all the data punched out. You can see here that when in the zone here, because I've got it all scrunched up, it's not showing, but this is the zone here. Go like this. You just don't see it colored up because, okay. So here's the zone, top to bottom. You can see here, as we break above it, we come back to the top of the zone, which is now support, and the market hangs on, okay? Now, it gets below the zone, and we make one more push up here to get back above the zone. We can't do it. So now the market goes back to the bottom of the zone, and you can see here, this becomes support, and we work higher. Now, like I said, these markets, yeah, they move, they jump up and down, but they come into these zones, as you can see here, and we break out of the zone. I don't want to say the bias, because anything I mark in a red thick level means it's a bias pivot, meaning once it gets above it, it turns a bullish. If below it, it's going to turn it bearish on a 2-hour close. Basically, just gives me the momentum of where I believe the market's going. So when I color these zones in, it kind of gives me an idea where the market's going to go. I'll give you an example. On the way up, and obviously that Brexit thing was just crazy as all get out. But you can see after we rallied up, where did we run out of gas? Essentially, we ran out of gas right here at the bottom of the zone, which was now resistance. That's at 1151. Now, don't forget, we were in the midst of just all volatility as all get out after the Brexit. So, of course, there's some overshoots. But you can see the the main thrust of the market was it ran out of gas in the 1151 here, okay, which is the bottom of the zone, 1151 to 1255. So we go down south of the border, and where do we go to? That's at 984. This is what I'm talking about today, is that if we get a good number, we're going to 984. Probably shoot past it, probably coming here into this 963. Okay, so we find support there, because that's what you're looking for. You're going, well, wait a minute. That's a support area now. It was resistance. It's going to be a support area, and I go. So I try and look at the action of the market. So you can see here that when it got down here, look at this. The market comes down here, jumps up real quick. It comes back down, and notice how it can't go any lower. And this is the bottom, which is now the top. This is the top of the zone, but now it becomes a bottom in the sense that it's supportive. So the market's holding. So that tells me, hey, you know what? We're right here in this support area now. I'm looking to cover. And unless I'm going to see this market break down. So as we start to advance right back up, I go, you know what? They're just not selling it anymore at this level. So you want to be a buyer, and then you start seeing the market work hard. It's just a matter of, remember, look at this. We go right back to 1151. And we get a nice tweezer right here. You see that? That's a very nice tweezer. And then the market goes, tweezer top, and the market goes right back down. And if you remember at the time, I was shorting here. Remember we did it on the webinar. I was short at 1148. And I only caught, I thought I was being fancy Dan. I caught like 25 pips. I thought I was, you know, really smart and looking good. And then a couple of y'all hung on. And I don't know what happened that day. Remember, we got this break. And remember, that was my area. That's that green bar. I said, it may not happen for a couple of days. I think it was like on a Thursday or something like that. But I think the market's going to go on and make it down into the 1020s. Probably around 1022, 1024, whatever, around 1020. And we drew this line. And look where the market bottomed out. The market bottomed out, which was, I think it was 1024. Right. Yeah, 1023. And one of the guys on here, he caught 95 pips. He got short with me. Actually, got short just a little bit lower, and then he didn't get out until it was 90. I think 48 or something like that, or 45. I don't remember. It was somewhere in the 40s. But he caught 95 pips. He was really happy. Well, like I said, so we got this hammer bottom. Like, so where do we run out of gas? We come out 1151. Of course, we're going to goose the stops. I mean, give me a break. So, of course, they goose the stops, but they run out of gas at 1151. So then we just start working lower. Not a whole lot lower, but we'll work lower until the market can dip past this 1114. And look, we keep reattacking this 1151. So you know where the market is going. Once we break above it, and this really ticked me off because in the 6E, I had a short here overnight, and right before I went to bed, I canceled it. I was so doggone mad, and I'll be doggone if the market doesn't go up there. Would have hit me because in the spot, I think I was looking like 1187. I don't know, I ended up shorting 6E. But I ended up moving it. And I'll be doggone, I wake up and we're down like 45 handles or 40-some handles. And if I had kept my limit in there, I would have got hit. But I say that's the way, so I go with these levels. I have my levels, which most of my levels go through. I always tell people, you know, how many people bought the bottom? And how many people sold the top? Not very many. That's why I don't put my levels across the tops and bottoms. That's idiotic. How many people? I'm going where the volume is. So you'll see that's where my touches come in. Like here's a good example. You see right here, I was saying, look, this is where the market is kind of hanging around. It finally breaks higher. That's where I put my support here. And that support came in at 1020. And the lowest 1023. That's 3 pips for the bottom. And that's what we're looking for. I'll move down there. I just thought it would take a few days. It happened that very same morning. But that's how I base it on. It's already time for a break, but I base it, so when you see that these are the levels, and then I color in these zones, because that gives me an idea. Like you see the top of this mini zone here, 1143, 1429, 1413, and 1429. You can see this is an area that we were looking for the market to run out of gas. This is actually on the Brexit thing, because we were wondering how high it was going to go on and move. But we're going to go and take a break now. Hang on a second. We take our normal break at the bottom of the hour. We'll catch about close to 10 minutes, and then we'll be back and we'll cover dollar CAD. We'll take a look at gold, and crude's already had a big day, but we'll take a look at that too. And I'll catch y'all back in about 10 minutes. Okay, everybody, welcome back to the crossover. Um, AZ says, if time permits, can you explain how you arrived at the 115 to 1250 zone? Oh, I mean, he means the 1150, 1255 zone, I guess. Yeah, because you see, I'm looking at, trying to see, what is it, the bulk? How is that? But the bulk is where you see the most hits of price. So you see here, this is how I come up with the bottom of the zone. You see how many times it's being hit, the high right here, and you look here, these are just self-drawn in the sense that you see here, when you look here, there's a lot of action going to the upside, to the downside. You see a lot of volume. You see right here, you probably can't see it. Oh, let me see, 221, so let's take a look. You can't see it because it's scrunched up. You can't see because you can't see the bars coming in here. I'll unscrunch it, but that takes away the. You can see right in here. Actually, this is well here. It's the same thing here. You see it in 214, but when I pull it back, it doesn't see the bars here. But you can see the action that is coming up here. And right here, there's a battle, but you can't see it as clearly. But I can. Is right here. What happens is the market goes down. It actually breaks here, and it has a return trip right here. You can't really see this clear, but it has a return trip right there. And it can't hold it, and it breaks lower. The market doesn't forget these levels. That's my take. So when they come back up here, notice how they're having the same fight right there, which is at 1255. You see, like I'll move this here. Look, it's the same battle all over again. They rally them up, and where do they find support? Which is resistance on the zone. 1255 now becomes support. You see, it's the same thing here. Look, we broke here. You don't see this clearly. We break, and there's actually a fight. The market returns back up to 1255, and it's trying to hang on after it slides here. And then it can't hang on. It's like a guy hanging on a ledge, and he's hanging on, and then his fingers slip, and then down the tubes he goes. Well, it's the same thing here. Now you see the market get right back above it, and they come back right in the same battle at 1255. It even breaks a little bit below. The guy's hanging on with his fingertips. He can't hang on, and then down the tubes he goes. The market doesn't forget these levels. So where's this key bottom? 1151. Okay? Now look. Fast forward to where we are right now, and where's resistance? Now 1151. Used to be the bottom of the zone. So I color those in. All they do is they just help me identify areas where to do business. That's essentially it. Adam says, sorry to be a pain, Paul. I keep meaning to ask, if you see a good weekly or daily level when you look at the charts at the end of the week, do you mark these levels into your 2-hour or 30-minute charts, or do you keep them strictly 20, 2-hour, and 30-minute levels? Regards. Yeah, I pretty much just keep it 2 hours because it's going to show. I see your point, though. He's saying, Adam's saying, hey, look, what if you see a good daily level or weekly level? Yeah, I mean, it's going to, chances are, it's going to have some prominence. We saw that before with the gold market, and we talked about this actually on the way up at the time. I pointed out a weekly level. This is way back. I guess it's in March or whatever. Remember we had this run up to 89. There's that 89. I think that was it here. Yeah, 89. There it was. We hit that run to 89. And I remember telling Pipsar, hey, we got some very good support right here at 89. And the market ran out of gas, and the high was like 87.80. Like it was, 1287.80. And I said we had support. There's good resistance on a weekly at 1289. And look at the market just turned around and just fell like a freaking rock all the way down to, what was it, 1225. So I do go on, I market, but for the most part, I just stick with the 2 hour, and the data's going to, the way I look at the data is going to go and show no matter what. The advantage is I use DTN IQ feed. It's like the best. I'm just telling you because they can go back. I think it's like 20 years worth of data. So I can go in and back up this chart as much as I want, and then the data will still show up, and then I can put my lines there, but still keep it with the time frame of the 2 hour. But that's a very good question. It is a very good question. I mean, if I have enough data, it doesn't matter if I'm looking at a weekly. All the data is going to still be sitting there if I want to go back 1,000 days or something. But we're going to move in to the dollar CAD. And I pointed this out yesterday, and even in the chat room, I go, man, we're getting a hella. I did this on the Wall Street chat room. I go, man, we're getting a hella hammer bottom on the dollar CAD, which is exactly what we got. At the time when we took this dip, I told people, not when we were making the dip, because I was paying attention to the crude, I go, this is my whole idea why I said, man, this is a hella hammer bottom, is because not only crude reversed, but it wasn't coming out of nowhere. The dollar CAD had fallen, and it fell right into the support zone here, which goes back to what AZ had asked me. Where do you come up with these? This is a very small little support zone, very small. But tell me it didn't work. It did work. It worked out very nicely. It had that little peak zone in there for quite some time. But you see all the touches here? Look, resistance, resistance, resistance. Not it pops into the resistance, but look, resistance, resistance. Now watch. Basically support. You see what I'm saying? So watch, as we come back up, this is basically resistance. Yeah, they overshoot it, but you see what my thinking is, it came in. So look, we rally all the way up to 31 whatever, and look, where do they find support? In the pink zone, 2863. And you see a nice battle as we come into that. So that was my take, is that, man, we get this hammer bottom, and they fall right into that zone, which is prior support. A very good battle area. So for us to come up with a hammer bottom as it came into the support, that's what I was saying. I said that in the with Blake's chat room, the Wall Street chat room. I said, man, we gotta. I go. It was right before the top of the hour, and I said, man, I go. We at top of the hour, I go. We get that close. I go. We got a hella hammer bottom for me. That was right here, and then look, the dollar CAD took off. I mentioned it also in the Anthony Cadelli's chat room, which I'm in. And I told them the same thing. I go, we got a hammer bottom in the dollar CAD. And actually, I had a couple of guys. I think one guy asked me, goes, hey, great call, but you know what, it's looking tired. What do you think? And I go, you know what? Yeah, it's a little bit tired here, but he can go higher. And I go, tell you what you can do. And I go, they may punch him a little bit higher. And I go, you may, but you'll, if we get a good NFP, you're going to get a little extra juice. And the guy goes, you know what I'll do? Because I'm going to stay long, and I'll just use a very tight stop. So we were able to go right back to the highs. Now we're pulling back. Whether he took the profits or whatever, I don't know. But he was saying, you know what, I'll keep it overnight and keep a tight stop. But we'll have to see. That's to say, at this point, if the NFP were to come in weaker, we'll give a decent chunk of these gains back to we'd probably dip into about the 29.50 area if it came in like so-so. Not bad, but like so-so. Like, let's say 158. The market's not going to like that. It's going to basically, people going to hold their noses and go, it would dip down around that 50, might get even into the 40s. We'd probably go down here on a so-so NFP, not a very good one. Something like 138, market is not going to like that. It's not going to like that number at all. I think potentially you can get up into the two teens, like I said, 219 is not out of the question for me. If we get that 219, then we're going to make a run up here. It doesn't mean we'll make it all the way there, but I would unload here. Now, I think that the crude is done. I've been saying that for a little while, and on these return rallies, it's been a good short. But I'll tell you what, like I said, a few days ago, I tried to buy it, and I thought it was a good bargain, and it kept going lower. Then I'll be doggone. The next day, it turns around and rips out everybody's face off. And then yesterday, we get the opposite. That's what I'm saying is I think in this crude oil, well, I think we're going lower is because nobody has control of the market, bulls or bears. But I think it's beginning to look just weaker, and why I think that we're going to 44.5. And then from there, we go to 44, and then from there, we go to 42.5. We did come to that right to the bias pivot at 44.92. But that's where we stand here in the dollar CAD. Now we'll take a look at the cable. We discussed that yesterday, and I thought my two targets, I told people my two targets were 29 40, I think it's 40-ish area, and 28.74. And you remember I said you want to get short. Now I preferred getting short on the run up to 31, but we talked about yesterday. Hey, look, the run out of gas around this 30.57. I myself, I don't even trade cable, so I'm just telling you, like it's not acting like I was short all along. I don't even trade cable, but I thought that this was a good area to get short right here as we bopped above this 31, but we talked about this 30.57 yesterday. I go, look where they're having trouble at. We got the 38%. I go on the way down. If you want to get short at 31, I go look to go on and cover around 29.45-ish. And then beyond that, my overall target really was 28.74. And I did say that. I go, I don't know if we'll even get through it, but I would be covering shorts to down here. And some of y'all did trade the cable and did really well. A couple of guys are saying thanks for the good call on the cable. So I don't trade cable. I just don't care for it. Plus, right now, Blake made a good point. You're going to have to use wide stops to use a cable. And I would just rather turn my attention to some other markets. Cable is a nice market to trade lately, but once again, these are 2-hour charts. These aren't even like 5-minute, 2-hour bars. So I like to see. I mean, it's had good action. I'm not going to say it hasn't, but you're having to use these wide stops. I don't like doing that. I just don't. But that was my take. I told you, cover around this move. I go, our overall move, get short around 31. I go, we mentioned this 30.73, but we said, hey, we're having trouble. Those of me, like I said, we have stepped in already. I said, hey, look, 29.45, that's a very nice area. I even tweeted that out or talked about it in the chat rooms. And then I said our overall target is 28.74. When we got past that, I was like, oh, my goodness. I go, hey, watch out for 28.74. I said in both chat rooms. Watch out, look out for 28.74, because we had talked about that. And look, the market ran out of gas at, I think it was 28.77. So I said yesterday, we may not even be able to take out 28.74. I go, maybe we might. I go, but really, any moves down here, you want to cover. Well, cable's kind of crazy and fantastic. I mean, fantastic in the sense that, wow, doggone, I mean, it did it all there in one day. This is pretty surprising. Amanda says, have I missed the SPOOs? No, we haven't covered the SPOOs. We'll get into the SPOOs. They're really trading as their own kind of animal. Let me jump into there. To be honest with you, I haven't done too much in SPOOs lately. That, you know, I've had some good calls in SPOOs, but the thing with SPOOs is, to me, I was telling another gentleman, for me to successfully trade SPOOs, day in and day out, it has to be the only market I'm looking at. That's the only way I think I can successfully trade this market day. I've had some awesome calls in the SPOOs, but successfully trade this market day in, day out, that's the only market I can be looking at trading. SPOOs, and then obviously look at the NAS and the Dow. That's the only thing. I mean, I might keep an eye on what crude might be doing or the euro dollar, but I have to focus all my attention, and I just can't do that. I'll make some good calls in SPOOs, but to trade it day in, day out, it's just, the thing is with SPOOs is, I tell people, I was telling another gentleman, was, you know, sometimes you get a market, we get this nice good back and forth action, and it trades against the levels and the fibs very nicely. The problem is you get these markets where essentially to a certain extent, it's about who gets trapped on the wrong side of the boat, and those people just get punished. So the market gets going in one direction and it just keeps on running, and it just runs over people. So you have to have your very, very tight stops within reason. Your whole time frame has to be different. You have to have a time frame essentially for the day, but on a very short time frame. And if it doesn't go your way, you have to immediately jump out. And then you may or may not go with what that overall trend is, but it's a completely different animal to trade. Like I said, I've had some great calls in the SPOOs, but like I said, to me, to successfully day trade this market, I think that I would have to only be trading SPOOs, just be trading the indices, and that's just not what I'm going to go on and do. So that's why I haven't done too much with the SPOOs. Now, right now, the key zone, going back to what AZ asked, here's my zone, which is, you can see here, 85, 50, 90. The markets never forget these zones. You see here, look, it's 85, 50 to 90. So that's where we're at right now. And actually, it's 98. It's not 90. But here, let me just move it over here. On the upside, if we get a good number, here's the tricky thing. They may like a good number initially. I think the key area is going to be right here. I want to say 1175 because it just takes out 950, but really just above it is this 14. I think it's cost 1475. It's basically 1425. We'll go on and mark this off real quick.